I'm Steve Stonebreaker, and this is Ephemeral Security. We have with us today Jason Costain, founder of Javloc, who has 30 years of experience in fraud prevention and bank defense systems. Jason, welcome to the show.
Thanks, Steve. It's a pleasure to be here.
When did you first become interested in fraud?
That's a very long time ago. I was working in branch banking at the time, going back to the start of my career, and we had a prolific fraudster in the local area. It was a university campus branch, and this guy took himself to breaking into student lockers in the swimming pools and stealing a check from the back of the checkbook. So the student wouldn't know a check was missing, and then he'd go to the local branch, which was ours, to cash a check, because up to, in those days, you're going back 30 years odd, that you could cash a check for £50 or less at a counter without the cashier checking even the balance. As long as it wasn't on a little refer list, you just gave the money out. So he'd figured this out, and he was funding a heroin habit. So over a period of months, I became an expert in recognising this guy's handwriting and became familiar with the local fraud squad in the police, which there was one at the time. And ironically, they knew this guy's name, but he was a very good informant. So in a way, we were funding this guy's lifestyle. The police kind of tolerated him, but they mistakenly gave me his photograph and his real name. And one day I was at the counter myself and watched this guy write out a check in front of me in the handwriting I've been looking at for months. And I just was able to challenge him with his real name, not the name of the person who was supposed to be in front of me. And he pretty much went white and ran out of the branch. And then I told the CID guy who dealt with in the fraud squad, and he said, "Oh, I suppose we better arrest him now." So they arrested him, put him in prison. And my video of me sort of waving my arms around in frustration at this check fraudster in the branch was shared at the police Christmas do, I believe. The long story was the police officer still went to see him inside because he was still a good informant, and his last words to him were, "I'm moving to Spain. My cellmates taught me how to do credit card fraud." There began probably a prolific card career.
And you told the officer that. That's great.
But yeah, fascinating insight into fraud. And then many years later, well, probably a decade later, I actually got involved in fraud management in a card business. And that's where things really took off.
So why do you think you're so passionate about identifying fraud and stopping scammers?
I mean, probably like a lot of your listeners who work in fraud, maybe that, it's a fascinating topic. Everyone you speak to likes a good fraud story. I like making a difference. And I think in banking, fraud is one of the jobs where it's very clear if you're making a difference, because it's pretty immediate, and that really kind of appealed to me. So once I found fraud, the challenge was there, and the ability to make a difference, and it in visible pounds and pence almost immediately. It was it just became kind of in my blood, and something I'm not really ever want to stop doing.
Got it. So was that the first time that you saw a scam, or had you seen scams before that, or were aware of scams?
Well, that was the first ever type of fraud I'd seen. Obviously, if it was, that was the third-party fraud where somebody's just impersonating a customer. But the first scam I saw was actually happened to a family member. So my auntie lived on her own. She was, looking back now, vulnerable, in her sort of 60s. She'd suffered with illness all of her life. She would get every 6 months or so visited at a house address by somebody who would claim that she needed some garden work doing or some property repairs, and they would charge her a fortune to repair a gates or a gutters or whatever. And to the point where in the end, my mum, her sister, who was 15 years younger than her, intervened, took a lot of the cash out of the house, just give her a small allowance, basically started to help her manage the situation. What really hit home to me that I found very difficult, and my auntie was clearly vulnerable, was the fraudsters came back one day, told her she needed a small tree cutting down in a front yard. They just cut it down, which was probably, the trunk was 6 inches across. It would have taken 2 minutes. And then they said to her, "You owe us £500. So, quite a few $700 maybe. And she said, I don't have that money in the house. And they said, that's fine. We'll drive you to your branch. So they drove her to a local branch, waited outside. She went in, cashed £500 and gave it to them. And I think that was a missed intervention opportunity by the branch. That was probably going back to 1995, maybe, and they saw a vulnerable person come in. They knew her first name. They didn't ask why she needed so much money. And the criminals had the front to actually drive her to a branch and get cash out. Almost defeated the safeguards my mum had tried to put in place. So when you see that level of confidence and danger actually for a victim to get in a vehicle, for people intent on doing bad things, it's a nasty world out there sometimes. And ever since I've kind of been interested in scams and seen lots of them.
Interesting. Was there ever resolution to that with your auntie?
No, there was no police investigation. There was no, they weren't interested. There was no, I think, limited amount of evidence because she walked in. There was no CCTV outside the branch, so they had no leads to go on. In those days, there was no video doorbells to record car registrations or anything like that. So it was a kind of case that was going nowhere.
So sorry, I meant the countermeasures to prevent it from happening again after that. Because I know you said your mama put in some things, and then that happened.
Well, I mean that became really the point where we got sort of home help involved in going around to look after it. In the alternate days that my mum couldn't go, so it was very much trying to help her live in her own home, but really take care of visitors at the door, put some notices up about unwanted guests and visitors, helped her to sort of give us some skills to try and push back on these people. And it didn't happen again, but I just think it was probably a matter of time, really. But it was a constant worry for the whole family, really. We just had to go around more frequently, make sure she didn't have access to cash. We told the bank as well that, probably think the same thing could have happened again, but we never tested it. So fortunately she didn't lose any more money, but she'd probably by that point already lost several £1,000s over a period of 2 or 3 years.
Okay, so we talked about some of the in-person fraud, the check theft, and then some of the confidence scams with your auntie. How have you seen fraud and scammers evolve over the past 20, 30 years?
It was interesting. My dad worked on a program to encircle the globe with fiber optic cable. And I remember him telling me at the late 90s, early noughties about how much data these things could handle and how there was a race on to encircle the planet because the cable owners could then sell bandwidth to telcos and people like that. And he told me about where the routes were going. So it comes on shore in the UK in various places, goes to a central hub in London or elsewhere. Same with Europe, same with Africa. And, I'd been aware of Nigeria being a sort of hub of fraud, particularly, well, we call it 419 fraud, but it was an uncleared check fraud. 419 was the kind of Nigerian penal code that was dealt with fraudsters. So, uncleared check fraud was a big thing back in the day, but I realised that, that part of the world getting access to free communication, good language skills in the country, and the advent of internet banking would probably open up the UK and the West to, criminals outside our borders in a way it hadn't been exposed to before. And subsequently that happened. So the kind of toxic mix of real-time payments, high value payments, readily available global internet, and relatively, minimal chance of being caught. If you were starving and wanted to feed your family and you could take advantage of a Western victim who seemingly has a lot of money, what choices do you have? And I think a number of people have decided it's for them. And you see these scam operations in various countries, whether it's Black Axe sponsored stuff in Nigeria or it's, Myanmar-based, pig butchering scam call centres. It's become almost in certain territories a state-tolerated activity, if not sponsored, and that's led to scams just growing, almost exponentially, really, in terms of the type. So the old, you've won the lottery email has become far more sophisticated, far more targeted, far more facilitated by large data theft and And actually, every one of us has been scammed, well, attempted scammed, that is, on a regular basis. You only have to check your junk mail folder to see how many times a day you're targeted. So, yeah, I think just the growth has really been surprising, but enabled by technology and really a unwitting Western public who largely trust the police and have a lot of money available and have been given the capability to send the money to people they've never met from the comfort of their own home. And that's a little bit frightening if you haven't been trained on what the risks might be.
So you touched on a number of things. I mean, the scam operations are really interesting, like the forced scamming, especially like in Thailand. But the word capability, I think that's really interesting. Like being capable to send large quantities of money or like your life savings with a click of a button. Can you maybe talk a little bit about that?
Yeah, I mean, worked in banking when real time payments came along, and payment fraud. So scams really were the ones that worked prior to real time payments were things like investment scams or romance scams, where it wasn't kind of an immediate play. If you're asking somebody, say, to invest in whiskey, which I used to see victims, they might be investing in a 10-year lot of whiskey barrels. They hand over a lot of money, and then in 10 years' time, they discover the whiskey doesn't exist. And that's a long game, but you don't need real time payments. You just need a willing victim or a victim who's drawn in and a convincing and plausible scheme, and obviously a bank account to pay the money into. So, yeah, I saw quite a lot of investment scams in the late 90s where people had fallen victim to investment, and it might be fine wine, whiskey, fine art, gold, bullion, but it's all these high value goods that are perhaps held in escrow, so to speak. And sadly, people are retargeted. I saw one victim come forward probably 3 or 4 years ago now, and he'd lost something like £180,000, a couple $100,000 in a scam where he'd invested in whiskey. 7 years later, was approached by a company saying they'd recovered his whiskey. They found it in a bonded warehouse in New Jersey or somewhere, and he was convinced it was now worth £700,000, and he was convinced he needed to pay the duty on it, the excise duty, wherever it was, and so he parted with another £200,000. So in the end, the recovery scam, as it was double the money, really, or more. So these long scams, are out there now. People are probably thinking they've invested in property, in whiskey, in fine art, and I see LinkedIn every time I see a whiskey investment advert. I shudder to think whether that will pay off and whether that firm's legitimate and whether LinkedIn, for example, has vetted them. And even if it is a legitimate whiskey investment, where is it? What's it actually worth? When it comes to fruition, what do you get? So I think people can fall for these scams, and it doesn't require immediate payments. But once payments became real time and high value, and people were given internet banking access, which in the UK, real time payments arrived in around 2007, 2008. Online banking became a thing not long after, and gradually take-up has significantly increased with the advent of smartphones. Scams like purchase scams and fake CEO scams and police and bank impersonation scams have come along. So the immediacy has been enabled by the technology, and customers have been given that capability without really knowing what the scams might be, and the controls weren't there. But the UK in particular has put in a whole host of controls ever since in a bid to just really de-risk the payment channel. But it wasn't like that at the start. It was just wide open.
Can we talk about the start some more? So what is a purchase scam?
Oh, yeah, sure. So, I mean, some classic examples during COVID in the UK, and I'm sure similar things in the States. People had a lot of time at home. Who might be on furlough, but people were buying camper vans, hot tubs, pedigree dogs, anything of value that can be marketed on sites like Facebook Marketplace, where there really isn't a kind of a payment mechanism or vetting process. You can just go online, search for a vehicle, and it might be advertised on Facebook Marketplace, and people will be persuaded to send money for a camper van that doesn't exist. Happened to friends of friends. They'd identified what they thought was a good deal, advertised on Facebook Marketplace. Vehicle was probably worth about £20,000, advertised for 18,000. There was a video walkthrough. There was copies of licensing documents from the UK vehicle licensing agency. It looked legitimate. They were arranged to see the vehicle the day before. They were due to go and see it. The criminals contacted them and said, "We've got somebody else interested. They've made it a cash offer today. We didn't want to let you down, but you can pull out if you want," which is interesting. They're kind of offering the exit. But if you send us some money now as a deposit, then we'll hold on to it for you, and we'll see you tomorrow. So the victim sent £10,000, never heard from them again. So goods that don't exist, goods that don't show up, goods of cheap quality, that lots of different purchase scams, and really it's any real high value goods that you can think of. It could be gold bullion at the moment. That seems to be a thing which people would invest in. So, yeah, it's important to deals that too good to be true. They usually are, and you don't give any money away until you've met the person and seen the goods. You can't trust it like an online shop. But I think the experience of online shopping has given people a lot of confidence to start sending their own money. Far better to use, PayPal's payment mechanism if you're buying on eBay. If you're buying on other auction sites, scammers paradise, and I would really not send any money to anyone I've never met.
Yeah, it's really interesting, like how safe eBay. Well, there's still some scams in eBay, but how much safer eBay, and especially paying through PayPal, the buyer experience is much better. But then you get on these random news sites, and it's the Wild West, right?
Oh yeah, absolutely.
So, what are the fake CO scams?
Oh well, I mean, so obviously, chief executive officers, the sort of standard one. I was working with a business a couple of years back, and they got regular phone calls. Some of the staff, allegedly from the CEO, saying, text messages rather. "I've lost my phone. This is a text from a friend. Can you send some money? I need you to do X, Y, Z." So quite often, just really speculative calls into businesses, trying to get hold of a member of staff, pretending to be someone senior, just saying, "I need you to make this payment." And unless the staff are trained, there's a risk there. And actually, if the CEO normally does that kind of thing, which in smaller businesses it sometimes can happen, then somebody can send the money on the demand of the CEO when actually it isn't the real CEO. So that's where it lends itself to AI and voice cloning and that kind of stuff. Been effective in the past by simply impersonation phone calls or text messages or emails. And if the organization's kind of run on an email from the boss, maybe there's a slightly misspelled email address that looks like the CEO's email. That might be enough that some firms require for somebody to raise a payment and send it to the scammers. So, yeah, it's a small but lucrative part of the UK scam losses. Really,
we had the advent of pretty much instant payments, right? And you mentioned in the UK how it got progressively worse, and so then what happened after that?
A slow burn, really, because I think the take-up of internet banking was relatively slow, I'd say, or steady burn. There was a branch network in the UK, that existed so people weren't used to sending money online. They're more used to going into branch to do their business. They weren't perhaps as used to online purchases. Whereas now, if you think about now, it's normal perhaps to buy something high value online. It's branch networks in the UK have been closed. It's large scale closures where many banks have reduced their footprint significantly. Thousands of branches have closed. So people have kind of been driven online, or online features have been enabled for customers to use, and all in a bid to really reduce cost and increase customer experience. And when it goes well, it's great. The ability to scan a check if you receive one and pay it in, or to send money to a friend. You don't need to get off your seat. You can do it in front of your favorite TV program and make that payment. And actually, there's something about the level of risk feels low when you're sat at home compared to if you were, writing out a check or handing physical cash over. So you see this kind of what's described as cognitive dissonance between the thing you want and the act of actually sending money, where there's just a kind of gap where people don't really realize the threat. And I've heard scam victims say it themselves, well, if it turns out to be a scam, I'll go to the police and I'll get my money back. And that's where that was in a conversation with a bank investigator. And, the investigator really should have said, if it's a scam, you will not get your money back, and the police will probably not investigate. So you need to be certain. They didn't have that frank conversation. The money was sent, and in that case, it was a camper van that didn't exist. Yes, another one, and that was £15,000 lost. That was during COVID, when people were staying at home using online shopping and online payments more frequently. So I think the advent of online banking take-up, the reduction in branch network, the availability of online goods has all kind of come along. And now we see in the UK that online fraud really started, I think it was around 2021, the losses from scams exceeded the losses from account takeover fraud, which was kind of what used to happen online. And when that happens as a fraud manager in a bank, you start to think, hang on, have we got our resource allocation right? We're seeing more money lost through scams than we are seeing through third-party fraud, which is what the bank's efforts might be focused on. So it takes banks a lot of thought process is required to then decide, well, what's the priorities? Is it protecting the bank's money or protecting the customer's money? So yeah, slow burn, but I think now scams are in full flight and it's been enabled by technology.
You had talked in our pre-show about some of like the regulations or some of the changes that banks in the UK started to make. Can you maybe talk a little bit about that?
I suppose the UK regulator, so the Financial Conduct Authority, has been quite active in scams, and they wrote a fairly critical piece of a paper in 2012 actually on investment fraud, and ever since then they've which is a scam type, and that's where people are convinced to invest in. Might be buying wine, might be these days cryptocurrency, might be stocks and shares, whatever it is, property. But there was a warning by the FCA to banks in 2012 that this was a problem. And then, the Consumers Association, which got involved in 2015-16 and raised what's called a super complaint. So they represented thousands of victims and complained to the UK Banking Ombudsman, where complaints go to. And so the Ombudsman was kind of faced with massive victim complaint volumes, a regulator that was keen on banks doing more, and an Ombudsman that was keen on representing, victims in terms of helping them get their money back. And then the media got involved and started to publish endless scam stories, constantly asking banks for comments on the latest victim who, would typically be someone vulnerable, lost their life savings, perhaps be an ex-veteran. So there was some kind of, sympathy there from the audience of the media. And in a bank, you'd get that story given to you on a Thursday afternoon. We want a reply by within 24 hours. We're going to print on Saturday. So you had a deadline on which to work to agree the bank's statements on the scam, what had happened, whether you're going to refund. And when you look at those cases, so that pressure, it really built, and in parallel to that, there's been various regulations and stuff going along. So like the treating vulnerable customers fairly is a significant piece of work. The consumer duty, all of these things, and even in banking principles, they all kind of say treat your customers fairly, exercise due skill and care as a banker. And I think that, it doesn't matter which country you're in, which bank you work for, and quite how specific the regulator is. We've got a duty of care to protect our customers' money. And in the old days, it would be, the branch vault and the bars on the windows. These days, it might be, the way you protect customers with technology. But either way, if you give the customers the capability to lose life savings from the comfort of their own home, you've probably got some kind of responsibility to educate people as to the threats they might face, so that they're making informed decisions about what they're about to do. So yeah, in 2019, all that pressure, the regulation, kind of the banks the main banks in the UK that handle 90% of the payments at least signed up to a voluntary refund code called the contingent reimbursement model, the CRM, and that really laid the foundations for what in 2024 October became compulsory refunds. But what that original voluntary code said was, as long as the customer's not been grossly negligent, the bank should look at its own role in the payment and decide, did it give an effective warning to the customer? Could it have intervened at any point in the scam? And if that was the case, then the bank should consider refunding. It also made provision for, is the receiving bank potentially liable? But that part of the CRM largely wasn't followed. But since 2019, there's been a growing level of refunds to consumers. And as of the latest stats I've seen at the first half of 2024, 59% of scams were being refunded to victims in the UK. And this is prior to the compulsory refund regulation going live in October 2024. So we're going to see that increase. But a decade or more of, 15 years or more of regulation and one-way kind of traffic in terms of banks' responsibilities, and that's where it became interesting as a fraud manager. Look at whose money you're trying to protect, the bank's bottom line or your customers' life savings, and at what point do those things kind of compete, and what's your priority? And ultimately, having to refund more people kind of creates a business case for the fraud team in the bank, because all of a sudden you've got a loss line that you never had. So I'm guessing in the US now, if you're not refunding many victims and you work in a bank, you're kind of watching what's going on, you're sympathizing with them, you're maybe trying to help them stop being scammed, but there's no financial incentive to do more. And sometimes, I was guilty of it, probably, going back a decade or more. Maybe we shouldn't refund scam victims. Maybe scam victims have only got themselves to blame, all those negative things. Actually, there is a duty of care. And when and voice fraud teams sometimes are the most vocal in their banks saying, well, we shouldn't refund scam victims. Actually, there are some people you should just consider refunding. And when you do, it creates a loss line in the bank. When you've got that loss line, you've actually got a financial incentive to raise a business case for better funding. So ironically, the refund code for scams, which, probably some fraud management in banks wouldn't have been too happy with, I must admit, when it first came in, have probably benefited from it in the long run, because it's given them a business case internally to invest more in scam defense. So, it's ironic that it's kind of come to fruition. But I think that the voluntary refund code, the CRM particularly, has led to a significant amount of innovation in the UK to try and contain those losses.
So I do want to get to the innovation, but you mentioned a couple of times about people losing their life savings. Could you maybe touch on a story about that?
When you work in fraud prevention in banks, probably the people listening to this might have had this conversation or been contacted. It was friends of friends. It was 5 p.m. I got a text message, and it said, I'm going to read it now, actually. Hi, Jason. How can you tell it's your bank's fraud team calling? I read that and thought, well, I'll give them some advice in terms of text message, because I was on another call at the time. But it basically just said, why are you asking? Someone asked you to move money. If anyone's phoned to say they're from the bank fraud team, be very careful. If you sent money, let me know. And in the UK, and I said, you can dial 159 to check it's the bank's fraud team. So in the UK, there's a central hotline set up. It's a switchboard all banks members of. You can dial 159 as a UK customer, and you'll guarantee get put through to your bank's call center. So that's a pretty good service. They've had, I think, 800,000 calls now. So the victims in this case phoned 159. I spoke to them as well pretty soon after, and I was round at the house an hour later, and it turned out that it was 6 p.m. by then, maybe 6:30. They'd sent £93,000 over 3 payments that day to a scammer or a team of scammers who'd impersonated their bank. So their bank was Barclays. They got a call in the morning. The criminals knew the last 4 digits of his card number, They also, they said you can call your bank, but we'll email you. So they email them from what looked like a Barclays email address. But of course, the header said Barclays, but when you hovered over it with your mouse or your finger on the smartphone, it reveals the full email address of the sender. They didn't know that existed, so it looked like an email from Barclays. It was a PDF headed letter from Barclays saying, "This is the fraud team. We're dealing with your complaint, your case. Somebody's trying to take over your account. Here's the contact number you need to ring." And it was signed off by Barclays head of fraud, which they'd just stolen the name off LinkedIn. So it was very sophisticated fraud, and over a period of several hours, they were kept on the phone and convinced to make 3 payments. So, fortunately, on the third payment, Barclays, a really good, talented investigator, got involved, spoke to one of the victims, their account holder, and basically said, "Okay, so what's this payment for?" The victims had been given a script to respond to Barclays. They said it's for building work, and they'd even been given an invoice. So the Barclays staff member, and this is how good UK banks have got at this stuff, the Barclays staff member said, "Okay, can you just send me a copy of the invoice?" And he looked at it and spoke to them and said, "Okay, so this company is based in London, and notice you live in the northwest of England. Why is a building company from several hundred miles away doing work for you? And I've just checked on Companies House, which is a database in the UK it's a government database of limited companies. The company, the builders limited company, was only set up, I think, 3 months ago. So, you've got a recently incorporated business several hundred miles away, said they've done building work to you and they want paying in full immediately. Do you think this might be a scam? And perhaps you'd like to think about it." That was the crucial thing. "Perhaps you'd like to think about it. I'll call you tomorrow." So that wording was quite crucial, because the victim said, "Oh, actually, you know what? Yes." And the Barclays staff member was saying, "Actually, it can probably wait until tomorrow, can't it?" So they clearly knew it was fraud. They'd seen the other 2 payments going out, so they clearly suspected it was fraud, a scam. They'd seen the other 2 payments gone out of their account earlier in the day, and they were basically giving the victims some breathing space. And it was during that breathing space they texted me and said, "How can I tell? It's my bank calling," because they didn't know who was Barclays at that point, because he'd had so many calls throughout the day. So that Barclays investigator, through asking some quite insightful questions and doing a little bit of their own research, gave them the breathing space, and that broke the spell. And then obviously I went around and spent 3 hours with them, kind of talking them through it. And by the time I left, they'd realised what had happened, and they went into the branch the next day, ID documents. That led to me sitting down with a group of the friends to talk them through how these things work and try and warn everybody else. And the final thing, Steve, on that, just to say, is and they won't mind me mentioning this, 3 days before the scam call, a very close friend of theirs had a stroke. They were in hospital. The brother of one of the victims, he was receiving palliative care for cancer. By the time they got a confirmation from Barclays, which came through 2 weeks later, that they were going to be refunded in full, a brother had sadly passed away. So when people say scam victims are idiots, but then you look at these heartbreaking stories, that call arrived at that moment when they're going in absolute crisis in their lives, absolute crisis. And it was plausible, and they went along with it, and they're in their late 70s. So, as a banker dealing with this on their account, they don't make payments more than a few £1,000s, and yet, the first 2 payments, by the time they were sending the third one, they'd already sent about £50,000. So the third one received a bit more attention, but you've got to look at your customers and say, they don't make payments like this. Let's have a conversation. And this is where that responsibility of bankers comes in. How easy is that to spot? Should we have that conversation? How effective might it be? How far do you have to go? And then ultimately, if they lose money, should you have to refund them? That's a case of a vulnerable customer, highly sophisticated scam. the bank missed an opportunity to intervene earlier in the day, I think. Thanks to the excellent actions on the third payment, it was stopped, and they were refunded in full 2 weeks later. I realise that's a long story. However, that tells you why it's not just a black and white, all scam victims are idiot comment.
Right. What were the payments for?
They were told there was a corrupt member of staff in Barclays, and the first phone call they got in the day was, "We've got this card transaction. We wanted to confirm with you, was this you?" The victim said, "No, it's not us." And Barclays said, "Okay, well, we'll stop your card. We'll order you a new one." Then he said, "Oh, just on the phone, while we're on the phone, have you made a payment earlier today for £1,500? The victims, of course, said no. But in the process of that conversation, they were relieved not to be victims of card fraud, which they thought was Barclays on the phone. They were concerned then that there was a payment about to go out for £1,500 to Spain, I think it was supposed to be. There actually was no such payment, but in the process of being scammed, they actually made a payment themselves. So they just became confused about who was making the payment and what happened. And then the second payment was for something like maybe £47,000. And that was supposed to be for kitchen improvements, a new kitchen, which is an expensive kitchen. And the third payment was, I think it was 40,000 was for home improvements.
But why did they have the script? Why were they supposed to say it was for the kitchen?
Because they know in the UK, banks will ask for a warning to be effective. The bank will say, "What's the payment for?" So the criminals know the banks will say that. So in the old days of card fraud, if you think about it, if your card number was stolen and there's a transaction on your card, the bank would phone you, Steve, and say, "Hey, Steve, Wells Fargo Bank, have you just made a transaction for $5,000 at Apple Store, New York City?" And you'd say, "No, not me," or "Yes, it's me." And that was the end of the conversation, as long as the bank knew it was you that they were speaking to. Once you're being scammed, the conversation is not just, "Is that you, Steve? Are you doing this transaction for £47,000? Then the question is, what's the payment for? So UK banks will now ask, if you're doing it online, what's the payment for? And you can pick a list of options. So it might be an investment, home improvements, paying friends or family, buying goods. And whichever one you select, you will be given a tailored warning to that type of scam. When you get phoned up by the bank to ask about the payment, which they might still do, even though they've given you that online warning, the script largely follows the same process, which is, what's the payment for? So the criminal know that the bank's likely to call, and they will say to the victim, "Okay, you're likely to get a call from the fraud team. In helping our investigation, this person who's going to call you is actually corrupt. They're trying to steal money. When they phone you, here's what you need to say." So they will give the victim fake invoices, a cover story, all in a bid to try and convince the bank staff member who phones them that this is a genuine payment. I've even known scam victims make up stories that they've got children they don't have. Scammers have said, "Tell them it's a payment to your son who's based in Bulgaria. He needs the money to buy a house." Was that scenario. And the victims actually said, "I'm sending the money to my son in Bulgaria," because they were so convinced by the scammer's story.
But what is a scammer telling them, I guess, before that? Like, why are they sending the money in the first place? 'Cause I know there's the cover story, but what's like the real story they think's happening?
Well, usually it's to help with a police investigation. So the scammers will say, or a bank investigation, the classic one would be, "We're investigating internal fraud in your local branch. We believe they're trying to steal money from your account," which is what happened with these friends of mine. "We've stopped the payment today, but we need to move your money to a safe account. So we've opened an account for you, Lloyd's or wherever it might be, another banking institution. So you need to make these payments." When the bank phones you to query it, you need to be careful, because these guys are in on it as well. They're going to try and steal your money. We're trying to move your money to a safe account. So you've got control of your victim. You've convinced them that the branch staff are corrupt, and you've convinced them that they're involved in process of investigating it and protecting their own money. And this kind of MO, bank impersonation scams, is called, and in the UK, bank impersonation scams or police impersonation scams account for millions of pounds of loss every year. Yeah, they're frequent. They happen all the time, and the criminals know bank processes almost better than bank staff do. They can manipulate them and make the victim think that it's a genuine call from the bank when it isn't.
There's all this know your customer, but two people in a transaction, it's almost like know the person you're sending it to. You mentioned some of the protections. that are in place? Are there other ones?
Yeah, I mean, there's a whole host of things that will happen. So, for example, one bank in the UK, NatWest, does gamification of scam education. So, you a bit like your credit score tools, maybe that you see in the US, where you can see what your score is. You can get tips on how to improve your score. This bank realised that they had a number of account controls like they built, which were quite good. So you can reduce your payment limits. You can switch off international spending on your card. You can switch off gambling on your card. You can switch off ATM transactions on your card. Lots of functionality in the mobile banking app. NatWest brought theirs together along with scam education, so that a customer now can see the security center advice, and it will say your fraud score might be 0 out of 10. If you do the following things, you can improve your score, and that might be reduce your payment limits. It might be check the devices it's linked to your account. It might be read this latest scam education information. It might be switch off your foreign transactions on your card until you need to go out of the country. And if you do those things, then your fraud score goes up. So it kind of gamifies the education message. So yeah, a lot of push on education within different banks, doing it in different ways. A lot of information around effective warnings at the time a transaction's actually taking place. Banks have also speeded up the processes around notifying beneficiary banks and recovery of money. And then in the background, so technically, historically, it would just be looking at payment fraud. You just look at monetary data. So a fraud team that's got a fraud defense rules engine trying to stop scams would maybe look at the value, the volume, the velocity of payments, maybe not much more in the old days. Now it would be a whole host of non-monetary data. So it might be victim profile data like age or location even. But ultimately now a lot more sophisticated with models being built. So you can have a scam victim propensity model you've built in the background. You might have some data coming in from the customer's device, how they use it, whether there's a phone call going on at the same time as a payment being made, which might evidence someone's being coached through an internet banking session, for example. So you can see there's a whole load of data sources now being injected into bank fraud defense rules engines to try and identify high risk payments and stop them. So you've got the education, the warnings, the technical innovation on the payment side, the improved contact with other banks, and then at a national level, there's a whole host of activities as well that goes on.
So if you have the cooperation with the other banks, that might be, I guess, making things easier. Are there certain known banks that are not cooperating as much as others?
Well, I mean, interesting in the UK, and I would say that it's worth a look if you're not UK based, because this is potentially the future for you. But the payments systems regulator in the UK, you can go on the website, I think it's psr.org, but if you Google payment systems regulator UK, they publish data at least annually on which banks have the highest rate of payments in terms of scam victim payments going out, and which banks receive the highest rate of scam payments. So you start to see which banks you're more likely to be not stop a scam payments, and which banks are more likely to receive the proceeds of crime that's a scam. And those league tables are showing really stark differences. So there's two league tables, one's for banks and one's for electronic money institutes. So banks are kind of a traditional full banking service organization. And, the difference in performance is marked. Some banks might be losing 3 or 4 times as much money as others as a rate. So it's an interesting benchmark. It's something that's really useful. On my website, actually, you can see there's a blog I've written. So my website's javloc.com, javloc.com. And I've written a couple of blogs on the power of benchmark data. But you can start to see the vast difference in performance. And I think one of the electronic money banks that receives large volumes of mule payments, scam victim mule payments, their rate of receiving payments is something like 450 times greater than the best performing bank. So you can see this migration of payments scams to electronic money institutes that have weaker KYC and poorer controls. And I'm certain the regulator looks at those figures with interest. And it's almost like a kind of the to-do list of the regulator when that data comes out. Because it'll be, okay, which banks seem to be laundering more money inadvertently, and which banks are more likely to not protect the victims from scams. So yeah, take a look at the blog and you'll see how that information is quite powerful.
You mentioned money mules and maybe like lots of small transactions. So you maybe just mention a case or explain how that works, and then what banks can do to identify money mule accounts as well.
It's amazing how incoming payments screening, domestic payment screening in banks, particularly in the UK at least, was always just an activity of the money laundering transaction monitoring teams. And because they're domestic payments, it might be seen as low risk. So there might be some monitoring of incoming payments. All that might happen is a rule might fire an assistant says this might be a trigger for, it might be a money laundering investigation. Someone investigates it, even if they think, yeah, it looks suspicious. All they'll do is file a suspicious activity report with the National Crime Agency in the UK. That might happen 6-8 weeks after the transaction's happened. So it's like a regulatory reporting obligation, not a requirement to detect and prevent the laundering of money. With the advent of scams and a kind of end-to-end approach by some banks, they started to realise that they don't want to be at the top of the league table for money mule banks. And there's things they can do. So smart banks in the UK have begun to look at their incoming payments as close to real time as they can. Some banks are now doing it real time. So that means that any payment that arrives into an account might also be risk assessed, certainly if there's a payment then leaving the account shortly afterwards. Because what typically scammers will do is they might recruit young people. So the classic MO is recruit students, tell them they can earn money from working from home, but just as a payments processor. Maybe the student just wants a bit of cash and they might get a cut. So they might get sent a £10,000 payment. The student might be able to keep £500. But what they'll need to do is when the 10,000 arrives, send 9,500 onwards to the pre-agreed bank details. So that's a classic money mule scenario. People like that are recruited online through Instagram, Facebook, you name it. And whether they're complicit or not is another question. But the reality is there's a ready army of mules who are prepared to receive payments. And again, on the website, there's another blog on how you can quite cheaply, cost effectively as a bank, start to look at payments coming in. So I know one bank literally on a Monday decided we want to try and look at incoming payments. How do we do that? They spoke to IT department who said, yeah, we can give you a file of every payment that arrives. Is it okay if we do that every half an hour? We'll drop it into a folder. That was a quick coding job that took a few days. Once the payment data was arriving into the folder every half hour, the fraud team would literally use a little bit of SAS code. So it just took a talented analyst on the fraud team. All that they look at really is what's the age of the customer? Are there any salary or direct debits on the account to suggest it's a properly functioning account? Is it a student account? And how much is the payment? And those simple rules alone started to show that where the risk was. So, just by simply getting a payment file, anything over, say, £5,000 for a student, where the account doesn't have a lot of other traffic, that's potentially high risk. And it proved to be the case. And pretty much every payment that came in and triggered that rule, it got so good that that bank just started to freeze payments and then investigate them. And that then was, as far as I was concerned, the first example I'd seen of near real-time inward payment screening and blocking. And that bank is now pretty much at the right bottom end of the league table in terms of receipts of muled payments. So it's not always a expensive solution. It's often a cheap solution developed by smart people in the fraud team that can get in the way. I know banks now are starting to feed that data in real time into the fraud risk engine. So I'll show up in a minute, Steve, but if you're making a payment now outwards, it's good for the fraud risk engine to see what's come into the account in the last few days, and that's not always been the case in the past. So this, I guess, population of data in the fraud rules engine is really taken off in banks in the UK and starting to do real-time transaction monitoring that was never done in the past.
That's really great that they're able to do that and so cheaply. Guys, I wanted to switch gears a little bit to voice deepfakes, right? Being able to deepfake someone's voice, spoof the caller ID. and also get somebody's answers to their, let's say, secret questions, right? Let's say that's, their first dog. You can pretty much social engineer them, get the name of their first dog, right? Or whatever. How are banks fighting? Some of this stuff kind of seems like an uphill battle with some of these scams. So what can banks do now to help with some of the newer scams that are happening?
One bank I worked at, we implemented voice recognition technology. So we got to learn how that works. And initially it was just used to spot bad voices. So, rather than trying to learn the voice of every genuine customer, millions of them, it was just, we knew the voices of about 100 prolific callers or fraudsters. It's far easier to look for that one or two fraudsters' voices across 100,000 calls than it is to do things with bigger data sets. So technology came out of the secret services and, in the hunt for, terrorists. So it's proven to work and it's now in the private sector. But I would have regular discussions with compliance teams in the bank who would say, well, is the voice recognition software fallible? Can it make mistakes? What if this is a synthetic voice? And yes, it can make mistakes. But guys, I just want to point out that currently we ID people by asking them their month and year of birth and their postcode. All of that data is on the dark web. It's been consolidated by criminals, and we ID people using that. If yes, voice biometric technology is not infallible, but it's far more secure than what we currently do. So it's interesting how that mindset existed in compliance teams, in certainly in the bank I worked at, which was, we can't possibly put this voice stuff in because it's not infallible. And actually, it works 99% of the time. It is correct, but it's much better than date of birth and static data. Well, I will get on to answer your question, Steve, but really the bigger question is, why are we still relying on static data to ID people? Why don't we move to voice biometric solutions and things like that? Because it gives you a proper strategic solution that you can do something about. So, for example, it's not just about the voice, it's about the phone number that's coming in. It's about the metadata that sits behind the phone number. You might be able to tell that it's coming in from a recognized carrier for your customer. It might be a VoIP call. It might be a number withheld call. There might be other acoustic signatures on the call. So, and that's before you get into, whether you're calling via the bank's app, which some banks now will let you call by bank app to your bank. All those things that allows you to see the customer's device. And there are some tools that the voice biometric providers have in terms of being able to successfully identify when someone's speaking in a different way than their customer, in grammatically a different way and different speed. It's not just about being able to synthesize a voice. It's being out. The banks have got a lot more at the disposal to identify other characteristics and flags that either tell him it's a genuine or it's a fraudulent a call. So I'm not too concerned about AI yet for voice cloning. There are other ways to defeat it, and shouldn't we be talking about static data ID?
Because you can spoof caller ID. Does that happen over the voice over IP calls? Is that generally when that happens? Because I know you mentioned the voice over IP call. I'm just curious.
For me, it's that metadata within the sort of telco sits out there. Banks can get access to that. So I'm not sure about number spoofing on over VoIP, but for me, just the ability to know whether it was, because if you think about a genuine customer, right? So Steve, you've got your voice print logged with Chase Bank. You've got your phone number. The bank knows your phone number. You might have lodged a known phrase with the bank. So my voice is my password with Chase. When you phone up, Steve always phones from his phone number. We've got his voice print on file. If you then get a call that comes in and it's VoIP, that in itself is a red flag. There's a number of risk factors that are data points are available for incoming calls. And for me, that's all assessed as part of the voice print matching, not just the voice print itself. I don't technically know the answer to your question, but I think with VoIP, I was just happy enough to know it was VoIP versus a UK domestic cellular call, for example, which you would be a US domestic cellular call. That's what Steve does on his phone number. That's great if you see what I mean.
I almost wonder, let's say I say oh, I'm calling from, my number, and it is my number that they see in caller ID. Okay, we'll give you a call back at that number, in 10 seconds, right? And so then you call back the customer's known number that they say they're calling from. It'd be a slight interruption to the process. You're actually calling their known number, right? So that would totally negate the spoofing. But sounds like none of us know exactly how to identify it. But anyway.
Yeah, but That's why I think banks are now investigating, calling from the bank app and calling the bank within the bank app. So you can see that's where the bank starts to get better visibility of the device coming at it. So they're not going to be relying on, a telco metadata. They're going to be able to see your device themselves and know the IP address and operating system, and that gives them far more confidence it's you and far more data points to assess when you call in. So I think the growing availability of data calls and the cheap availability of data means that sort of cellular calls or landline calls are going to diminish, and banks might in the future start insisting people phone them from the banking app and will only phone you from within the banking app too. And that's certainly a policy that I could see coming along in the near future.
Yeah, that would make a lot of sense. So I did want to kind of switch gears to something we had spoken about in the pre-show about merchant wallets, guessing credit cards, that sort of thing. And just, I guess, some of the newer type of fraud you're seeing at scale that's maybe using machine learning or generative AI to guess credit card numbers at scale, that type of thing.
We were chatting with me about years ago when I first got involved in managing card fraud, going back 25 years. There was something called bin attacks, where criminals would know the bank's bin range, so the bank identification number on your card, the 16-digit PAN number on a card, the first 4 or 8 might denote which bank it is, and the last sort of digit on your PAN number would be your account number. The algorithm banks used to generate numbers within that range was available to criminals, so the criminals could generate the next account number in range, and criminals would come up with transactions based on made-up account numbers in the knowledge that some of them might hit an active account. That disappeared off my radar in sort of the early noughties, but it came back I've seen it come back to the industry with a vengeance in the last 4 or 5 years, where I think the advent of quite aggressive merchant acquirers who looking to grow market share, maybe have quite weak KYC, meant that criminals were able to get card acceptance capability. What we've seen is, I think, is the use of robotics and perhaps AI just to fire large volumes of transactions on made-up account numbers, fire them at banks through an online provider, so food delivery or ride hailing providers. You can open an account with them, register a card and a wallet really easily, and you can, as a criminal acquirer, merchant capability too, but you can basically start generating high volumes of card numbers synthetically, fire them at banks, see which ones come back as a active account, and then you can start to fire at them, expiry dates and CVV numbers even. And what you can get away with if you've got the scale and computing power is massive volumes of transactions fired at a bank, and some success in getting div accounts through that and performing transactions. So in the UK, in the first half of 2024, the volume of the volume of CNP, card not present, losses went up by 26%, and the value went up by 11%. And a lot of that was a kind of mix of this type of activity I've explained, and also social engineering of one-time passcodes for the wallet provision of cards. So yeah, I think criminals have just got using technology to attack banks and using computing power to do that at volume. And banks need to be looking for unusual signs of, bin attacks and sequential card number attacks and that kind of thing.
So you have the third parties, right? There's like Stripe and some other providers, say maybe Plaid, I don't know. They get a request. It is a card number that does not exist, but the first however many numbers indicate it is this particular bank, right? Does that bank get notified of that failed transaction for the card that does not exist or not?
If the bank's not looking for it, it might notice it. So you have to be looking for unusual spikes in authorizations as an issuer to see those come through. Banks potentially started to not look for that kind of stuff after bin attacks vanished, or largely disappeared years ago. I know some banks have rebuilt those controls to start looking for spikes in authentication activity. So, and also some of the spikes in transaction authentications has been that great that it's almost a potential denial of service, because it just kind of obliterates the bank's authorization system for a period of time because of the volume coming at it. So if you've got any outages on your auth platform and genuine customers complaining that the card wouldn't work and it's early morning, we're talking 2 a.m., 3 a.m., it's a good idea to check what the traffic is across the network at that time. And you might see there's been a huge spike of activity. Where was that driven from? Who was the acquirer? How do you monitor that in future and figure out what's actually happening? So there's a lot of threat signatures out there. The banks just need to look for them.
Sounds like some rate limiting might be in order as well.
It's amazing how many, say, online grocery stores in Brazil there are, and how many thousands of your customers might transact at an online grocery store in Brazil you've never seen before at 3 a.m. in the morning. But some of those things are just like standard policy rules that you might at least set up the monitoring to flag those to you, so the fraud team can become aware of them in near real time, that there's an attack underway, and throttle it as well. Just kind of kill the traffic and decline that merchant in systems like Falcon, for example.
Okay, so I wanted to learn more about Javloc. Can you tell me about why you started it?
I've done buyer and fraud consultancy work in the past, and I just wanted a bit more freedom to pick and choose the work I do. I think really what I've seen in the last decade in the UK has been a increase in scam defense, particularly. And I think there's lessons that are useful for other countries, particularly from what the UK has done with scams. So I now spend quite a bit of time advising companies and banks on how to improve scam defenses, particularly. So I've worked with some of the bigger consulting firms, so that they show up on site at their clients fully informed about APP fraud, for example. As a fraud manager, when you're faced with a consultant who comes across as reasonably knowledgeable about fraud and has perhaps been brought into your fraud department at the behest of the CEO of the bank, the likelihood is that the consulting firm doesn't know as much as they might think, and they've probably been briefed by somebody like me in the background. And that's how the system works. And as a fraud manager, I've been faced with that in the past. And you have to just work with the guys who've been brought in. Actually, they can help surface issues that you perhaps haven't been able to articulate yourself, or you might have felt like you wouldn't have even been believed. So I'm working with some consultants like that, and also directly with banks advising on scam defences, particularly in the UK and also overseas.
What countries do you operate in?
Australia, Canada, not in the US. Obviously UK, so English-speaking countries generally.
So you also have a blog. Do you want to talk a little bit about your blog?
Talked about different topics, but mostly just trying to help fraud professionals who've got similar challenges to what I used to have in terms of how to manage scams, particularly. And in my blogs, you'll see, like I say, talk about how you can get better at screening incoming payments, talk about the use of benchmark data, discuss why some banks perhaps are performing better or worse than others. So just trying to put useful information up there around, scam controls and defenses that might prove useful for some of my peers.
Nice, great. Is there anything else you want to mention about Javloc?
No, that's it. People can find the website, javloc.com, or look me up on LinkedIn and go from there.
Okay, I'd like to talk about a couple recent news articles in the fraud space and get your take on it. So the first one's by Brian Krebs. The title is How Phish Data Turns into Apple and Google Wallets. I think he touched a little bit on this. Just a quick summary of it. U.S. citizens are receiving text messages claiming to be from the U.S. Postal Service or a local toll road operator. I got one of these texts just yesterday. So when a victim clicks on the link and they'll be prompted for their credit card information, they're sent a one-time code. I assume it's to verify something in the scam, but really the code allows the victim's credit card number to be added to the bad guy's Apple or Google wallet. And what's really interesting is these Apple or Google wallets, they'll sit in like phone banks in China, and the bad guys can proxy the NFC tap to pay to those phones in China. And also some ATMs accept tap to pay, some gas stations accept tap to pay. So it's another way, kind of a new take, I guess, on, I hate this term, smishing, where you have the mobile wallets involved, because mobile wallets were great, but now there's more fraud with them. So anyway, what are your thoughts on this?
Yeah, I mean, the way I understand how it works is, and this is the problem with some bank controls. When you get predictable process in banks, criminals can start to socially engineer it. So in this example, I think what we're seeing is when a customer's so a customer gets a potentially their own worst enemy gets one of these parcel delivery texts, gives away the card number because they're paying a small fee, they think. That card number data and their own data they give away is used then to load their card into the criminal's wallet on the criminal's device. When the bank sees a card being loaded to an online wallet for the first time, the criminals know the bank will fire an SMS OTP to the genuine customer to say, approve this, you've just loaded your card to a new wallet. So there's social engineering involved based on the predicted arrival of an SMS OTP. So if you are a caller scammer, you know that your activity, and when you press submit to load that card to the wallet, is about to generate a text from the victim's bank. That's a very powerful tool to use with your victim, because you say, right, you can talk them through what's going to happen. And hey, presto, a text message comes from your genuine bank. So how would, for an unsuspecting victim, that makes me think I'm definitely speaking to the bank. They knew a text was going to arrive. Hey, presto, a text has arrived. Okay, what do you need me to do? So that's how these scams work. And in the UK, ironically, it's seen something very similar, something called the Payment Services Directive required all banks to authenticate transactions over a kind of a floor limit. I won't go into the technical details, but around, say, $300, any transaction that's higher, the PSD regulations said to banks, you must authenticate the transaction with the customer. What that did inadvertently, what it did for good was, I guess, go to customers to approve card spend over a certain value that was online. What it did create, though, was a predictable process to criminals, because social engineer, because they knew that if they performed a card transaction over a certain value, a text was going to arrive. So you phone your victim, and you know that when you press submit, it will generate a text from the real bank. So that's how this scam works. And in the UK, I've seen some banks reporting big spikes in fraud, basically fake card wallet enrollment. Basically, the solution I've seen some banks now starting to do is almost eradicate SMS OTP and other things like, if you have the customer's genuine mobile number and you see a wallet enrollment coming in from a different phone number, then look for those disparities and also move away from SMS OTP altogether. Authenticate transactions through your mobile app. So now my bank, if I make a transaction over a certain value, or if I load my card to a new wallet, I'll get a notification on my phone, not an SMS OTP. I'll log into online banking. The bank will check my face matches the face record it holds. So this isn't Apple Face ID. This is the bank checking my face biometrics against its own record. So I think banks, and by doing that, they can see me, my face, my device, my IP address, all the predictive things that I have, and what I look like, and that's a whole load of data that you don't get from SMS OTP. So I think it says this fraud really is about moving away from weak authentication CVM methods like SMS OTP, and the bank getting a greater sight of the customer's device. But yeah, I'll stop there, Steve. But there's some technical things banks can do to try and solve this, and some of it is just a policy decision.
Got it. Yeah, that's sounds like a really good solution. Actually, I like that they have to log in with the Face ID, and it's not the device Face ID, it's the apps. That's cool.
These kind of things, it's really interesting because simple rules like if the phone number that's requesting, a new wallet provision is different from your customers, somebody needs to kind of program that to say, step up, don't let that happen. And I know banks where they've had that capability to see it. They've got the data. They can see that disparity, but they just hadn't programmed it as a policy rule to block it or to step up when that disparity existed. So quite often for the fraud manager, they're working against an organization capability, if you like, that's been created where there hasn't been much thought beyond getting the process to work. So the bank might have set the process up to basically comply with Google or Apple Pay wallet provision, and to make it work, but they didn't think about the policy rules for the what I'd call the unhappy path. So they built the happy path, but what they should have said was, what are we going to do if the phone number's different? And what they should have said was, well, we're going to step that up and require extra ID. So it's only when you get a fraud breakout, the fraud team gets brought in to explain why these losses are happening. The fraud manager then says, well, because you didn't, we've got this disparity in phone numbers, you didn't program that. And then a load of change work will be done to build that step up capability. You've got to ask the question culturally, why didn't they just think of the unhappy path in the first place? Wouldn't it have been cheaper to build it for both the happy path and the unhappy path? And there's dozens of examples throughout my career of well-meaning product design and journeys that work when everything's great, but the criminals will test it and they'll find the unhappy path, and then the fraud guys are usually left with a mop and bucket to clean up the mess.
Yeah, it kind of sounds like really the fraud team should be part of if you have an application security team, you should be performing threat modeling, and the fraud team should be part of the threat modeling exercise, right? And then these things would be surfaced during development or before development, right?
Oh yeah, 100%. And you can't, envisage everything, but you can certainly, the most mature organizations and the ones doing best at fraud management are the ones where the fraud team are part of the design process and their concerns are actually listened to. I mean, in the past, going back several years, the number of times I'd heard myself and fraud team colleagues said, well, that's a day 2 requirement, might be a day 2 requirement of this project. So day 1 is get the happy path launched. Day 2 will solve the fraud gap that you've called out. Thank you. And then quite often the project would get shelved after day 1 because they run out of money. Day 2 never gets built, and eventually there's a big blowout. And then again, an immature organization will do that. And even if you called it out, they'll say, well, how much might we lose? And the fraud team say, well, we don't know, but it's an obvious gap. And if in an immature bank, they'll accept that risk, even though they don't know the size of it. They'll put it on the fraud team to articulate how much we could lose. And, I don't know how long's a piece of string. And then once the project's delivered what it does, day 2, day 3, at some point, there's a massive fraud blowout. And typically the fraud team are asked to explain why they let that money leave the bank. So it's a kind of sign of an immature organization, I think, when projects are managed that way. And the fraud team just needs to be involved in the sign-off and design process. And actually, what I've seen when that works really well is some brilliant product innovation that works for the customer, works for the fraud team, and it's highly secure, so it can be done, but it just takes a degree of collaboration and willingness and the right culture in the firm to make it work.
Nice. Okay, last story we have here is 2 men were sentenced in the UK over a £1 million fraud based on stolen banking letters. So 2 gentlemen stole letters from banks. They were addressed to various victims, and they intercepted the post. Next, they impersonated the victims and eventually transferred the money to their own account. So what are your thoughts on this one?
I think it's a brilliant example of legacy processes. It's just it's amazing. I worked with a great guy early in my career, and he just said, I'm sure the fraudsters have a diary note, and every couple of years they'll come back and do the same fraud, and then because again, it's business cases. It's incredible. So, for example, you might have a ruling of card fraud defense system. Let's pick Falcon to use by lots of banks on card fraud. You look at the false positive as a fraud manager. You want to find fraud. You want to detect high values of losses and prevent it, and you'll constantly screen the false positive rate to make sure the fraud find is high, to make sure the disruption in genuine customers is low. And a rule can be performing brilliantly, and then a week later it can be 100 to 1 false positive, really badly performing, loads of alerts, loads of genuine impact, and it's simply because the fraud attack has gone away. That doesn't mean it was a bad rule, and it doesn't mean the fraud team are incompetent. What it means is, the criminals have given up. What it doesn't mean is they're never going to come back. The diary note will be put in, and they'll try again. So the challenge for the fraud team is, how do you retire that rule but not lose the organizational memory? And can you put some kind of threat sensor, to use your words, in place so that it pings again in future? So yeah, the fraudster's diary note I've seen come out from time to time in UK banks on mail intercept. Obviously, the process involved in dispatch of mail are relatively insecure. The amount of people who handle a letter between the bank sending it and you receiving it is probably phenomenal, and the opportunities to steal. Also, if you respond by post to your bank, they haven't got a device ID or an incoming phone number or a voice print. They've just got a squiggle on a piece of paper that looks something like your signature, that they may have lost the record they ever had of. And you probably find that they won't check signatures, or they might sample check 1 in 100. And what you've got is a wide open process that can be exploited, as happened in this case. And it reminded me of fraud I saw that blew up quite prolifically in a bank I worked at, which was criminals realised that it was a really weak process. Well, actually, go back a step. Criminals realised that you could get large amounts of payments out in cash out, or large payments sent in a branch. The branch would ask for the customer's card and PIN and the former photo ID. So the criminals thought, okay, how hard is it to get a card? And it was really easy to phone the bank up. I think you probably need 2 pieces of static data to just order a replacement card, please. The bank thought it was low risk because the card goes to the customer's address. The criminals figured out that with DVLA, the Driving and Vehicle Licensing Agency, there's £20, I think they charge for a replacement driver's license currently. So for £20, the criminals could get a copy of your driver's license, and for a quick phone call to the bank, they can get a new debit card coming out and a PIN number. And what they can also seemingly use is Google Street View. So you've picked some victims in leafy suburbs with big houses. You're going to get high net worth individuals. You can target them because you've bought, say, a list of victims of a certain bank. You can see if there's a post box at the end of the drive on Google Street View, maybe, and you can quickly order a new card and a driver's license for £20, and then you're into your local branch with a baseball cap on, pretending to be an 80-year-old guy, and make a payment for £50,000. And I saw that fraud successfully perpetrated against one bank, and it was a good £1 million plus losses. Now, it kind of demonstrated to that bank that they needed to move replacement cards higher up the hierarchy in terms of security checks. And they also demonstrated that they needed to retrain the branch staff, because when we check CCTV for one of the cases, we noticed that the fraudsters always wore a hat. And we actually say to empower the bank staff, it's okay to ask the customer to take the hat off, because the criminals are coming in with a hat and sunglasses, and the staff were saying, I was uncomfortable asking them to take it off. And you start to think, wow, they're asking for a driver's license, but the point of asking for the driver's license is to check the photo, and they weren't. So, it's amazing how, these processes are legacy processes, particularly, are out there. They're quite weak. They can be exploited. Criminals will come and attack you and then disappear. And actually, sometimes the staff just need a bit of refresher and the confidence to intervene. And, it didn't surprise me when I read about this story that mail interception and impersonation was being done, and it made them a lot of money, didn't it? I think it was over $1 million.
Yeah. Okay. So now we're going to move to the last part of the show. It's pick of the week. It can be anything from a website, book, podcast, movie, TV show. It doesn't have to be security related. My pick of the week is a podcast by Noisa. It is an award-winning podcast. It's called Real Dictators. It covers infamous dictators throughout history, with contributions from eyewitnesses and expert historians. Jason, I think you said you're also a fan of that podcast. Is that true?
Yeah, I've listened to them all, and there's so many dictators, and there's new ones coming along every day, aren't there? But yeah, there's it's fascinating, Steve. I'd encourage anyone to listen to that. It's unbelievable what Colonel Gaddafi had done, or Idi Amin, or Saddam Hussein, or some of the living dictators we've currently got as well. So, well worth a read. Really agree with you there. It's an excellent podcast.
Nice. And what is your pick of the week?
There's a guy called Thomas Erickson. I'm reading a book at the moment, and it's called Surrounded by Psychopaths. And I got quite interested in criminal psychology when looking at scams, because it just helped try and understand how criminals were able to socially engineer people. But those of us who worked in big organizations may well from time to time do personality questionnaires and get given a color on a disc or that kind of system. Myers-Briggs is another one, but it helps you understand how you think, helps you understand how your colleagues think, helps you communicate better. That's the idea. But what this guy, Thomas Erickson, found was that there's probably 2% of the population who don't really conform to a particular color or style. It's because they're psychopaths. And I have come across more than one in my working career. And I always try and understand these people better. But read the book. It kind of explains how you might be struggling with that one person at work who's just really difficult to manage or communicate with. And I'd encourage people to read the book, and you might go into work the next day with a slightly different view of some of your colleagues.
Nice. Okay. So yeah, these will be in the show notes as well as the link to javloc.com and the blog. Thanks for coming on the show, Jason. I really appreciate it.
Well, thanks, Steve. Thanks for the opportunity. It's been great to talk.
If you liked the episode today and would like to help support us, please hit subscribe, drop us a review, or share it with your friends. Thanks.